Good afternoon, Andrew.
Welcome.
How you doing?
You're not in your cozy environs anymore, Hannah.
No, I'm in another green room that is not my office.
It's a not as cool as your bar with all the stuff in it.
It's a different office, but we're gonna
Although it makes
we're
your
up to
teeth
good
look
today.
very white and nice, I have to say.
Thank
Winning
you so much.
smile today.
Thank you
Isn't
so
your
much.
dad a dentist?
He is.
And isn't his favorite job of yours to go fit the gear for all of the hockey team and
Yeah, they use many a mouth guard.
yes, many
And
a mouth guard. That's a good job. I think that's a good job for a
my
dentist
dad
to have.
my dad always jokes that his best walking advertisement is me and my siblings' teeth. So
I didn't go the
he's kind of
braces route.
not
I probably
wrong.
could have used them. I was just too lazy.
I think a lot of people go that route and do just fine, but
Yeah.
that was kind of not an option as the poster child for
I'm
stay
guessing yes. It
home
was like
practice.
Hannah, you're 3 years old, you're getting braces.
Sure, yeah, straight out the womb. How is everyone doing here today? Say hello in the chat. Let me know you can hear us okay, you can see us okay. Thank you for joining us a minute or two early. We have some exciting things to cover today. Some of it
Yep.
you may have seen if you joined us last week, and some of it will be new. So if you were here last week, if you have questions from last week, feel free to pop them in the chat. Andrew and I are going to address those here today. We already pulled early. I have some questions that were already asked that we're ready to address. If you have additional ones, put them in the chat now and we'll collect them. We have seen some exciting activity the last few days when it comes to VIX zones. If you know what a VIX zone is, if you were with us last week, you may also be tracking these and already be excited. If you don't know what a VIX zone is, you're going to find out today, and it can be a key to your trading, and it should be a key to your trading every day. Knowing where the VIX is and where it's going to go next can give you a lot of information. And if you don't use it when you're trading, you should be. So we'll go through that too. Andrew, any takes on the market you want to share with everyone today? How are things looking going into the close?
I think we're just waiting for Congress to pass this bill. If it's not totally stupid, we'll probably rally. And we'll see the bottom of zone 2 or somewhere mid to lower.
Yeah.
We do have a trade on to take advantage of that. However, if they pass a really stupid bill and it makes the bond market unhappy, we could like be 5,700, 570 SPY and VIX higher. So it's kind of a don't know what, Congress, what can you do with them? We're stuck with them.
Indecision and waiting for news like that can be a very difficult piece of trading. One of the beauties of the way that Andrew uses cash collisions, which is how he trades the changes in VIX zones, is he doesn't care which direction we move, just that we make a move. So we're going to show you guys today what that means. And if you're new, you're looking at this at an extremely important time. Right now, the VIX is at 18. If that doesn't mean anything to you, it should. 18 is a very exciting number for the VIX because it's the midline. You might say, Hannah, I know the VIX can go all the way almost to 100. Why isn't the middle 50? We're going to explain that to you today. But 18 is the middle, and it's always a turning point. The VIX is either going to make a turn upwards or it's going to make a turn downwards. Andrew doesn't care. Either way, a cash collision will happen, and he's positioned to profit. He's going to show you today how you can hop on that train with him. So we're going to get started. If you were here last week, you're going to see some content at the beginning that we did last week, and then you're going to see some new stuff. So stay with us today. By the end of today, you're going to walk away with what VIX zone we're in right now, what that means about how much the market can move every single day. There's a clear number. The market's supposed to be moving about this much every single day. Right now, we're not doing that. And that's really important. We'll get to that towards the end. The fact we're not moving as much as we should is telling us something about what's coming next. And at the end, Andrew's going to show you and talk a little bit about how he is positioned right now and how you can also profit from a move from 18 either higher or lower. So let's start at the beginning. Some of you will be new. If you are, say hello in the chat. We love new members at our events. We host these regularly, at least usually once a week. So stay tuned for more. We always kick off with a disclaimer. Let me know you guys can see my screen, okay? Just throw me a yes in the chat if you can see this. This basically says that we're all adults here. Anything you see, any decisions you make today based off of what you see here, your decision. We are all adults. What we're going to show you are how pro traders, how Andrew uses the market and uses his own options expertise to trade. Any decisions you make based off of that, your own decisions. You get the gist. Now, I want you to take a look at this chart. I'm going to show you 5 stocks in the next 1 minute and their movement over the last year. The reason why I'm showing you this is because I want you to notice a couple things. Now, you're going to see on your screen right now Apple, and this is Apple's stock price movement over the last year. You see 5 big swings, and I even put the percentage move of each of those swings right next to it. So you can get a feel for what one of the most volatile stocks over the last year looks like. Now, Andrew, when we look at stocks, we want to see movement. Why do we want to see that movement? What does the movement create for us?
Volatility.
Right. And volatility is
opportunity.
Yes. It's one of those ITY words. You were close. Opportunity. When stocks move, there is a chance to make money, especially if you can time with options. Lots of opportunities over the last year to make money off of Apple. Here's another one. Palantir, huge upward swing, 525% over the course of 6-7 months. Huge swing, huge profit potential if you would have timed that trade correctly. Here's Halo. I didn't know about this one. This is one that Andrew has traded before. 4 big swings, all significant profit potential. HIMS, same deal. 3 big swings here, 414% that first one. I know there are people here, because everyone who actively trades can relate to this, who see stock moves like this and you want to kick yourself. You want to say, if only I knew back in last September that HIMS would make a 414% run, I would have bought it. Well, if we could do that, we'd be out of a job, Andrew, and we'd probably own an island in Tahiti because we wouldn't need to be here and learn how to trade. These moves make trading individual equities exciting, but there are some complications. We'll talk about that in just a second. Here's the last example I want to show you. This is Amazon. I'm sure a lot of you have traded this. I'm sure a lot of you even own this right now. There are 2 things that every stock chart I just showed you has in common. And if we knew these 2 things, it could make trading much more exciting. And that's if the stocks made these moves more frequently. So instead of Amazon doing these big moves 3 times in a year, what if it did it double that? What if it did it double that? So if they could make the moves more frequently, and also if we could predict them, because there's no way to know. And if someone tells you this, they're not being fully honest. There's no way to know that Amazon is going to make a run like that. You could have the best trading strategy in the world. There's no way to know. So how can we find more of these moves and trade them in a predictable fashion? Well, I'm going to show you a chart right now because we can. This is a chart of stock movement. So these are actual price movements. This is for the same period for the last year. There are 3 times the moves of any of the individual equities I just showed you. And we can actually predict what these moves are. If you have an idea what this is, what you think it is, throw it in the chat. This is something you can trade. And if you've been paying attention at all, you'll know that this is the VIX. People don't fully, I would say 99%, and Andrew, back me up on this, 99% of retail traders don't understand the possibilities of harnessing the VIX to profit, to make money. Would you say that's true, Andrew?
Everybody but our subscribers.
Yeah, correct.
So you might be light at 99%.
If you're an Option Pit regular, you see us talk about VIX, talk about volatility. In a second, we're going to define what that is. But what you need to know for right now is VIX is and can be a money-making machine for you because it has those two features that equities don't. It stays within a range and it's predictable. So it's making these big moves and it's making them regularly. Andrew, can you walk us through this quickly, define what the VIX is, and share a little bit more about why this is the number one name you want to be trading, especially right now?
Right. So VIX is just a forward look at 30-day volatility in the SPX. So it's the sum total of everybody's opinion about the market. All ends up in the VIX. It was created specifically because institutions requested it. The most quoted item when I was a floor trader, especially in the SPX, was what's the straddle? 30-day straddle. How is it? 30-day straddle. How is it? Like by the end of the day, they don't even say 30-day straddle anymore. It's just, how is it?
Sure.
Because institutions wanted to mark their books, where volatility was, and help them price. So that was in the 90s when we had the data, but VIX wasn't really active as an index until probably 2004. And then the futures traded on it, and the ETFs and everything took off after that.
So the VIX has been a cornerstone of big trading decisions by institutions, big banks, hedge funds, and so much so that they actually created a number for it, so that all those phone calls Andrew used to get asking him, what is the number? The VIX became that number. So what we see now as the VIX is that. Another thing
30-day implied volatility for the SPX at the money.
Correct. If you are new to the VIX, one thing I want to make sure you know, so you don't sound silly talking about it, it's not a dollar amount. So when you talk about the VIX, it's a number, it's a calculation. So it's giving a number to where the market is right now and where we think it's going to go over the next 30 days. So when we talk about the VIX, we don't say the VIX is at $18. We say the VIX is at 18. That'll keep you guys looking cool when you talk about the VIX. You'll know what you're talking about. The VIX also trades in a range and it has cyclical patterns. These both make trading VIX more predictable than trading any individual equity or ETF. And we're going to walk you through how it's more predictable. How do we do that? Well, to harness the VIX movement, we must know three things. Where are we now? Where did we come from? And where are we going? Lucky for you, Andrew has built 3 very specific step-by-step processes to understand each of those things and make a decision on a trade. So we're going to walk you through these 3 things in the next 5 minutes, and then we're going to talk to you about the VIX at 18, which is where we're at right now, and why that is such an exciting time, because we know a move is guaranteed. Whether it's up or down, we know a move is guaranteed. So Andrew, walk us through the VIX zones. And before you do, if you go to Google this, if one of you just went to YouTube and said, what are the VIX zones? Nothing's going to pop up. Andrew created these. And Andrew, talk a little bit about why you created them and then what they mean.
One is I wanted to explain to students how to describe VIX to people. So you also had to make it different from describing a stock. Like people used to technical analysis for stocks or whatever they do for stocks. But VIX does not trade like that because basically all of the samples of VIX spends 25% of its time, right, in a quartile. Like, so
Right.
in zone 1, when volatility is low, about 25% of the time, VIX will be between 8 and 13. About 25% of the time, VIX will be between 13 and 18. Next 25%, 18 to 24, and then above 24. So that's 24, 30, 50, 100. There just are not a lot of samples up there. So what happens is your whole VIX world lives, in those 4 zones. Now, the thing is, because it is cyclical, when you're in zone 2, you only spend 25% of your time in zone 2. That means 75% of the time, you got to be somewhere else. So the whole purpose of this is to get students in the mindset of you're in one zone, and as soon as you're in one, you're looking to get to another one, depending on what's going on. So
Right.
the idea is you have a quantifiable way to measure where VIX is, and then basically, okay, let's set up for moving to the next zone. And that's what we do.
When we make the transitions between the zones, so when we move from zone 4 to zone 3, or when we move from zone 3 to zone 2, that's when a cash collision can occur. I'm going to define that for you and show you some examples in just a minute. But like Andrew said, when we enter a zone, since we know we only spend around 25% of the time there, we have to go to another zone. The only question is how long that move will take and whether it will be a higher zone or a lower zone. Different pieces of the VIX can give us hints and clues as to what that might be so we can make the trade with the most conviction. So this is our first step, the VIX zones. It tells us where we are right now. And I want to pop in the first question here, Andrew. We got this from someone last week. This is a great question. And he was, I think I might be taking this a little bit early, but we'll do it early. He says, so the VIX curve is the third piece of what we're going to talk about. And Jim Cameron asked if the curve goes flat between contango and backwardation, which we'll show you in just a second, or is it a condition that could happen anytime?
So the easy answer is to get generally from contango to backwardation, the curve will flatten once because the market's basically, it's calm, and then it's like, I don't know what's going on, then it's freaking out. But at any time during the day, the market can all of a sudden, the curve can flatten out. All the volatility expectations go totally flat. So that hopefully that answers that question.
Here's another one. WA asks, why do traders tend to underestimate serial VIX straddle?
Can
you explain quickly, Andrew, also what that question is asking?
So what that question is the serial straddle is just the call and the put of the VIX future that is going to expire the soonest. Serial straddle is just the monthly though. So there's a June, a July, and August, just one per month. We're not talking the weeklies.
Sure.
And what that means is, let's say the straddle is worth $2 or $3.
Right.
He's saying, why do traders tend to underestimate how much it can move? And really the reason why is they keep thinking in terms of just straight bullish or bearish action. Like in my view, that can just stop. The thing is the market can stop moving, but VIX can keep moving.
Right.
So,
or vice versa, which is kind of what we're seeing right now. VIX
Yep.
can stop moving in the market. Like both environments are possible. And we'll show you guys that in a minute.
Right. Just especially when we're waiting for an event like we are currently.
Right. Exactly. Okay. So VIX zones we just walked through first. The second thing that you need to know that's going to tell you where we came from is the VIX direction. And this one's pretty easy. You use the zones. And if we just moved from a lower zone to a higher zone, so if we went from zone 1 to zone 2, that puts us in an up zone trend. If we were in zone 4 and we dropped into zone 3, that would be a down zone trend. So last week at this time, we were in zone 3, and then we dropped down. We had a down zone into zone 2. And then I think just yesterday, we had an up zone back into zone 3. So the reason why you want to know where we came from in the VIX direction is to understand momentum. Think of it like a river with a current. The current is pushing the market in one direction. You're more likely to win on your trade if you are swimming with the current, not against it. So VIX direction helps us know which way we are more likely to move. So if we apply this to today, Andrew, like I just said, we were in zone 3, then we went down to zone 2. Now we're back in zone 3. So that's technically an up zone. How is that helpful for us? What does that mean about where we think the next zone is? How do we use that information?
Well, generally, when you cross a zone, you keep continuing in the zone. So if we are basically up zone from 2 to 3, normal movement is like, okay, we're going to continue, because basically the tone of the market has changed.
Right.
So generally when you cross from 2 to 3, you're like, okay, things are starting to get a little woolly, a little exciting, volatility starts picking up.
Right.
Right now we've had this kind of vacillation around 18, which we'll cover base at the end, but because we're waiting for an event. And then once the event gets by the market, then it can start sort of trading on its random path. So right now the path is somewhat truncated by Congress wanting to spend about $10 gajillion or whatever they're going to spend.
Sure.
And that does, the market waits for that. So currently really not bullish or bearish, anything, kind of sideways.
And sideways, like I said earlier, is okay, because the way that Andrew puts on these trades, he's just looking for that move. Doesn't matter if it's up or down, we can still profit off a cash collision. So far we have, if you're taking notes at home, the VIX zones, we have the VIX direction, and then the next thing we're looking for is, where are we going next? We need to know that in order to make a trade that can make money off of that. To know where we are going next, we use the VIX curve. And honestly, the fastest way for you to understand the VIX curve is for us to show you some examples. So I'm going to get right into that. Now, if you join Andrew as a volatility trader and learning how to use the curve, he teaches you all of the pieces of this. If you want to understand how you can use the VIX curve to make smarter trades, even on equities, on other stocks on a regular basis, he'll teach you how to do that. But I want to answer a couple quick questions, and I want to jump into the examples. Fastest way for you guys to understand the VIX curve. The first question here, Andrew, is about contango and backwardation. So those are two types of the curve. You want to read this out in your answer to it before we jump into what the curve looks like?
Yeah, so his question about contango and backwardation. Bullish expectation signal is when indices are in contango and VIX is in backwardation. So now the next question is, well, a bearish expectation signal is when the indices are in backwardation and VIX is in contango. So it's actually, the VIX curve is in contango, which is generally bullish for indices like SPY, SPX. Also, the volatility in all of those products, SPY and SPX, are generally in contango as well. So they sort of match, they have to, the curve. When a bearish expectation, when VIX is in backwardation, so you're bearish the broader market, when VIX is in backwardation, and all those indices, all the volatilities in the indices will be backward too. So basically, you're bearish SPY or SPX when VIX is backwards, and you're bullish when VIX is in contango. And that is the answer to that question. So Rick R he just had a couple of terms he had sort of sideways in there.
If your brain is in a pretzel, you don't know what contango is, any of the words Andrew just said, let's explain that to you. Because understanding this is the key to being able to predict where the VIX goes next, which we need to do to make a trade. So let's look at an example. Say the VIX is at 18, which it is at right now. You'll see that horizontally on your screen, there's a line that says VIX 18. So that's the current VIX price. This curve that you see below VIX equals 18 could be an example of future projected, not prices really, but calculations of the VIX. So what this is saying, if you look at this chart, is VIX is at 18 right now. The market is predicting, it is pricing that in 30 days, the VIX will be at 17. It's pricing that in 60 days, the VIX will be at 15. In 90 days, it will be at 15. In 120 days, 14, so on and so forth. So these are future projections, potential projections. They can change, as you'll see in a minute. Future projections of what the VIX could be over time. Now, this sloping line you see below, that's the VIX curve. So what we just talked about, it tells us where the market thinks the VIX will go. We want to know that because when the current price of the VIX runs into that future price, that's when we have a cash collision and we can actually make money. We can collect money from that. So let's walk through this example. This is not exactly what it looks like right now. We're going to show you that at the end. Say the VIX is at 18. Here's the future projected curve. Okay, we have 30 days. We go 20 days later. Sorry, 10 days later. So we're at 20 days to expiration. The VIX has moved down a little bit. So it was at 18. 10 days later, it's at 17 and a half. So it's getting closer to that target of where we thought it might move. Let's fast forward a little further. Okay, 10 more days, and the VIX has dropped 0.5 more. So the VIX, the current price, and what was the future price have actually become one. They've hit each other. That is a cash collision. Now, you might have questions. How do I make a cash collision? When do I trade it? We have some answers for you. You want to make a cash collision trade when the VIX enters a new zone. So like Andrew was talking about earlier, we know some predictable pieces about the VIX that we do not know about any other name in the whole market. I don't care if it's your favorite stock to trade ever. You don't know today if Apple is going to go 10 bucks higher, 10 bucks lower. And that when it does that, it spends 25% of the time there. You just never know that. Andrew, walk us through kind of the timing of when you make a cash collision trade. And then let's talk a little bit about where we're at right now.
So the most important thing is you care when things get moving. So a lot of people questions like, when do I trade? And to me, trading is not investing. Trading is, I want to be buying options when something is moving. So the idea is when I move from a zone 1 to a zone 2, things are in motion already. You're basically just trying to jump on a train that's moving. Right. So if you want to get somewhere, you jump on a moving train. If you don't want to go anywhere, you jump on a train that's just stuck in the station. You're not going anywhere. So
Correct.
The whole idea about the cash collision as a trade is by moving from one zone to the next, you're already starting that process. The process is already moving. You're jumping on a moving trade. Like Hannah said, you have momentum.
If we look at the VIX, oh, sorry, go ahead.
So now we know when VIX is 18, right, which is basically at the start of zone 3, right, that it can go right back to 13, right? But you know, with 100% certainty, it's not going to stay in zone 2 forever. It can't. Historically, it only stays there 25% of the time. So once you start moving, the whole idea with VIX is what makes it unique and fun, and the vol product's fun, is that it has to move. And that's when we put on a cash collision trade once it starts working. So again, once you've moved, when VIX moves back to zone 1 or zone 3, right, the cash collision gets hit because the futures now go to the cash and we get paid. And that's what will be our successful trade.
Let's look at the VIX behavior so far this year and I want to highlight some of the zone changes to you guys. So every green arrow on this chart you can see as a zone change. This is a chart of the VIX. On the far right-hand side, you'll see that I have the numbers of the zones. So below 13 is 1, from 13 to 18 is 2, from 18 to 24 is 3, and then zone 4 is anything above 24. So far this year, we've touched every zone but zone 1, which is not surprising, because if you are alive right now, you know that there's market volatility present. But even since we talked about cash collisions and zones last week, we've had 2 more zone changes. So like I said, we were in 3, we popped down into 2, and then we popped back up into 3, which is where we're at right now. We're still kind of teetering on that edge. Like Andrew said, though, we know we can't stay in this zone. Andrew, have we ever spent a whole year in zone 1?
No.
Have we ever spent a whole year in zone 2?
No.
3?
Nope.
4?
Nope. Although it feels like it this year, but it was
feels
only
like
really about a month.
It feels like this year has been a lot of movement, and it has. But movement, like I said at the very beginning, if you joined us very early at the beginning, movement equals opportunity. Volatility equals opportunity, and especially when you have a rubric like the one Andrew has created for the VIX, and you know when it's going to change, when the zone will change, and about how far it will move, you can make a predictable trade. Let's look at some examples. Let's say, and this is a real money trade that Andrew made in the last year. So Andrew loves when I brag on him. I'm going to tout this for a minute. This is a real trade from the last year. So the VIX was at 24.9. That was at the beginning of this trade. So at the start of the trade, VIX 24.9. You can see those future projected prices of the VIX. And the market is predicting that VIX is going to go down. A 24.9 VIX is pretty high. It's saying, I think over time it's going to go lower. So let's play out what this trade looks like. Here it is at the start. Here it is after 5 days. So we dropped from 24.9 to 23. So it is going down. Now we can see that first future projected price. So the price in 25 days now, it's 5 days later, that price is 21.1. So we still have some movement to make up, and we are waiting for those two things to hit each other. That will be the conclusion of the cash collision. 5 more days, VIX hasn't moved. The curve has changed maybe a little bit. 5 more days, VIX drops even more. We're at 21.2. Our curve has come up a little bit, so they are very, very close to hitting each other. Fast forward 2 more days, and we've actually flipped and flown by each other, which is our cash collision. Andrew made 163% profit on this trade in 17 days on a $1.90 option. So if you just bought one contract, that's $190 to make this trade. Let's look at another example. If you guys have a question as we go through this, pop it in the chat. I want to make sure that you understand how a cash collision works, because like we're going to show you, we are having 2 times the number of cash collisions so far in 2025 than we had in the beginning of 2024. So there has never been a better time to be trading these moves. Second example, we're at 23.8, again, a higher VIX, a lower curve, predicting we're going to go lower. After 5 days, we move down. 5 more days, we're getting closer, still a little separation. After 15 days, so 5 more days, again, we've made that flop. The VIX drops all the way to 14, so almost down into zone 1. It's moved a lot, and our curve has totally flipped. This was a big winner. 800% profit in 15 days. Andrew only paid 10 cents for this option. So that would be $10 if you just took one of these positions. Andrew, when we were talking at our traders meeting a few weeks ago, you got very excited about the VIX volatility trading, and you wanted to do this right now. So let's talk a little bit about why we launched this volatility zone trading product right now. And in order to do that, we can look a little back at last year. So walk us through this. This is last year. This is the first 4.5 months of 2024 chart of the VIX. And it looks like we got 6 zone changes on this chart.
Yep. 6 zone changes, getting ready for the election. I mean, it was a really good year for stocks. So that was, even in a bull market, things were moving, but you notice you got less zone changes when you kind of have that straight up bull market. It wasn't as active, and that's to be expected.
Right.
When you kind of, the market's just kind of doing the same thing. You're kind of like zone 1, bottom of zone 2, and you kind of sit there. Every once in a while you had a pop, but then you had a little excitement there for a while, but again, not very many zone changes. In 2025, the same amount of time, we have had 3 times the amount of changes, something like that. And I wonder why that is. Let me see. I gotta really, what is it? Oh, Trump. We have now a mercurial president, as opposed to whatever our last one was. I guess, now they're whatever the news is. But right now we have a guy trying to do all kinds of stuff. President is trying to do all kinds of stuff, like it or don't like it. It creates volatility. And as Hannah and I have told you here, volatility means more zone changes, which means more opportunity for us to place trades and to close trades. It's the whole point. The more it moves, the faster we can get in, and then the faster we can get out. And that's the whole point of the strategy.
We have had even 2 zone changes in the last week. So the previous chart didn't show you the last week. That was a direct comparison of the first 4.5 months of 2024 and 2025. But the pace of these zone changes is not slowing down. If anything, it might be picking up a little bit. And because we don't expect, do you think that, President Trump is not going to stop tweeting? We still have to get a budget passed through Congress. We still have the tariff discussion, which was only put on hold for 90 days.
Yep.
There are so many future volatility events that we know are going to happen. We have 3 more years with President Trump. So we are projecting that this is absolutely going to continue, and it shouldn't change. So right now, we are sitting at kind of the cusp of zone 2 and zone 3. So I thought this was an important question that JSH asked that I wanted to ask you, Andrew, and have you answer for everyone here today. How do we know if VIX will go to zone 1 or zone 3 from here? How do we know that?
Generally, I would say we go into zone 1 because we're in contango, and generally contango curve is short-term bearish VIX.
Let's look at the curve that we're in right now, and you can explain this a little bit, Andrew. So when Andrew says contango, he's talking about, just think of the charts I showed you earlier. We have the current VIX price, that green dotted line going across right there. See, it's a little over 18. And then we have that VIX futures curve. So right now, it's technically predicting what, Andrew?
So what that means is the contango curve you see there means that all the volatilities in the short term are lower. So we're expecting less movement in the short term, but more movement 30 days and out, meaning higher VIX 30 days and out. But lower volatility 30 days and in, which is how we build our trade. So that is the term structure, the way the market is currently giving us. And historically, that's what happens. So just by observation, a contango curve generally says lower VIX in the short term. And like Hannah said earlier, we got to wait for this budget thing to come out. but I'm surprised that the curve is not flatter and giving less of a signal. It's still kind of, it's still looking for a good outcome is what I believe this curve says.
If you guys have questions about, I see some of you asking, where does the prediction chart come from? This prediction chart, just so you know, is the VIX curve we described. It's projecting the future prices of VIX. You can use a website called vixcentral.com. I'm going to type this in the chat right now for you. That is a free resource. You can look at that and it will show you what the futures curve is looking like at any point. Now, in order to understand what that curve means for you as a trader right now, you have to join Andrew and learn how to actually trade these things. I also saw a couple questions about the zones, how much distance is between each zone. What does that mean? We just had that reposted in the chat for you guys, so you can see the different zones. The zones aren't quote unquote equal in range. The VIX trades generally between 8 and almost to 100. It's gotten close to 100 maybe 2 times ever. Mm-hmm. I think in 2008 and then also during COVID, it got kind of close. But it spends most of its time around 18. So 18 is the middle of the zones, which just happens to be where we're at right now. There is something a little odd happening right now, though, Andrew. And one of our members last week was onto it. Ed G asked, how many days can we move so little in the market and keep an 18 VIX? And in order for you to answer this, Andrew, I want to clarify one thing. Depending on which zone we're in, zone 4, 3, 2, 1, the market is projected to move a certain amount every single day. So, Andrew, right now we're in zone 3. How much should the market, let's just say SPY, how much should the SPY move every day when we are in zone 3?
Should be like around 7.5 points, close to close.
And how much are we
around
moving?
7.5 points.
Right. And how much did we move today?
Not that much. About close to close, maybe 3 points.
Right. And it was the same story yesterday. Zone 3, we should have moved 7.5. We moved closer to 3. So there's a disparity. Tell us why that is and why it's so important that we're at 18 right now and where we might go next.
So liquidity providers, those were the people that make the markets. I used to be one when I was young and handsome. They will price an event, and they'll leave the event pricing there until the event happens. So volatility VIX won't change until after that event happens. And currently we're pricing this budget impasse. So how long will it take? It's going to take as long as the event. And then after the event, we will start moving naturally. The brakes will be off, so to speak, and we'll start moving naturally again between zone 2 and 3 and 1.
It feels almost like a pressure cooker right now, Andrew. You have one of those where you can like fast cook your rice or something.
Yeah.
And it kind of feels like because we aren't getting the release of the normal market movement, it's kind of building. So we could almost, when we do get a move, whether the VIX goes to 13 or it goes to 24, it's likely to be an explosive move. Would you say that's correct?
I would say that is correct, yes.
So,
exactly right.
Right. And we think that the, coming to a conclusion on the debt and the spending might actually be the catalyst for this. So, I mean, would you say this could be something in the next week, in the next 2 weeks that we might see?
I mean, they're still debating this, but I feel like it's going to happen within 2 weeks. I mean, the House came up with a bill, whatever, in about 2 weeks. So the Senate has to do whatever. I would see like there's a lot of pressure on them to get something done.
Right.
Yeah. Because that's their job. But what do I know? I'm still trying to figure out what they actually do. But yeah, probably within a week or 2, we should see some action. If you're looking for a 1 or 2 day, I don't think it's not enough time, so it's not. Part of this is when you have an event like this, you got to make sure whatever trade that you want, you have to give yourself enough time for the trade.
Right. So for those of you here today, to kind of sum up, we are at 18 right now. because of this pressure that's building, because the market isn't moving as much as it should every day, because it's anticipating some news, there is a powerful pressure building up that is going to move us pretty quickly in one direction or the other. And Andrew, you have a trade on right now that can benefit no matter which way we move. So if VIX is at 18, if we go to 24, you can win. And if we go down to 13, you can also win. So we don't care. We don't have an opinion on where it's going to go. We just want to see the movement. And since we think it might be a week or maybe even 10 days until that movement happens, you really have until then to get set up for a trade off of this, to get yourself set up to actually win when we do get that move either way. So I want to walk you guys quickly through how you can do that and how you can trade these VIX zones on a regular basis with Andrew. And then we'll take any questions you guys have at the end. So trading the VIX zones is part of a new flagship service we launched called Ripzone. I'll go through these kind of quick because I want you guys to understand that. Well, I'll just tell you now. What the heck? Let's get wild. We are accepting payment plans for those of you who want to join Ripzone. So over the next 5 minutes, I'm going to walk you through everything that you can get. But if you give us a phone call, the price of this, we can break it into chunks for you. If you want to do a payment plan, if you say, okay, I want to pay this month, this next month, whatever, our team is amazing. They will work with you. Give us a phone call. Justin, if you can drop that number in the chat, give us a call. If you have credits, sometimes when you buy other trading subscriptions, you can accumulate credits. Give us a call. See if you have any credits. You can use them towards Ripzone. I would do it now because we know this trade, this big movement that's been pressure cooker building up, it's coming. So you don't want to wait a couple weeks to do this. You might miss a big VIX move. So let's go through what you get in Ripzone. You're going to get trade alerts from Andrew. Andrew's going to send you at least one a week. Now, he's usually waiting for the VIX zones to change. That's our catalyst for a trade.
Yes.
But he is going to send you those actual alerts. That means the option chain, the price you should pay, every detail down to the very last thing that you would need to know. You can track all those in a portfolio that we provide for you. Members only, you get access. You can see every single position automatically tracked in that portfolio for you. Andrew's you're going to be sick of Andrew by the time you're a Ripzone member. He sends you a daily brief, which tells you what zone we're in, what the direction is, what the curve is looking like. So you will always know where we are in terms of the VIX zones. You will never have questions. He'll even teach you how to read and understand some of those things yourself. If you are a visual person and you like to see these things in action, Andrew put together a vol product trading guide that walks through all of that. So you will be able to actually see, okay, here's the rules. If this, then this. If this, then this. This is how you should be using the strategy to your biggest advantage. Andrew likes to take notes every class. You'll always get those. They're uploaded to the member portal. Andrew is actually in the middle of teaching a vol trading class. So you'll get access to some recordings, and then you'll also get a live VIX Zones masterclass. Andrew, you've been doing this week. So you're 2 courses in, and we have a couple courses to go on the VIX Zone masterclass. Talk to me about the community in that class, how hands-on it is. People always have questions. What if I've never done this before?
Right.
Would they be?
So people ask questions. Nope. I answer them at the end. We usually have 150 people in, the room asking questions, maybe a little more. And just on how do I use it? How do I use what you're talking about? Also helping them applicable for other trades they want to do. So the one thing about learning about VIX and volatility is you take what you learn and you can move it to other strategies, to other stocks, to other things. You actually learn something you can take.
Right.
It is something you can learn and take with you.
The benefits will extend outside of just trading the VIX. You can use this for any trading strategy. It's going to make you a smarter trader. Mark is also going to be a part of this. If you guys don't know Mark, he is the CEO of Option Pit. He and Andrew founded option pit together. And he is actually going to meet with you once a week to show you how you can use some of the same volatility trading strategies on individual equities. So every equity has actually a volatility number, and you should be using those to make decisions about how you trade. If you don't, you're trading blind in some way. Mark will teach you how to do that.
Yep.
So here on this slide, you can see the summary of everything that you get. We do have a 1-year subscription, and we also have a 3-year subscription. We are doing payment plans on both of them. So we talked about this earlier, the increased volatility we're seeing right now because of international relations, domestic stuff, like every event that we're seeing that's causing this additional volatility, we think that is going to continue. So we created a 3-year opportunity for you guys to get more value out of this. If you have questions, like I said, give us a call. Payment plans, we can do those. So our team is awesome. They're US based. Give them a call. You'll talk to Ted or Drew, maybe Zach on the phone. They will help you out to figure out a payment plan, whatever your best option is. And then Andrew, I'm going to pull, we have a couple more questions for you that I'm going to shoot over to you now. Let me grab these. We had some questions about the type of trade. So we talked a lot about what the trade is going to look like and how you can win if the VIX goes up or the VIX goes down. Can you talk a little bit, Andrew, about normally how long you're holding these trades and about how much these trades actually cost for someone to put them on?
So the duration of the trade, anywhere from 2 weeks to 30 days. Again, depending on what zone we're in, curve, all that. Generally, we're not spending more than, I would say $200 to $300. Everything I do is via one lot, so the spreads, and we trade calls and puts and spreads. So a call vertical or a put vertical, that's pretty much it. It's a fairly vanilla strategy. We don't trade iron condors. We don't sell options except for the leg of a spread. So if I'm buying a vertical spread, I'll buy an option near the money and I'll sell the out of the money. So there's no iron condors. There's no what I would say option selling strategies. We actually use VIX going down as our option selling strategy. Right? Because that's what you sell options for anyway, because you want volatility to drop. So
right. And if you're new to trading, a spread, Andrew, just by definition is like a call and a call or a call and a put. There's a formula of directional options trading strategiries that create.
Exactly. So there'll be vertical call spreads or vertical put spreads in combination with a call or a put. But they're all, I believe, level 1, level 2 stuff. There's nothing esoteric. The volatility products are exciting enough without adding another layer of complexity to them.
Right. When Andrew talks about the volatility products, can you just explain super briefly what that means, Andrew? Because we didn't actually get into that today, but that is a core piece of what you trade inside of Ripzone. So we talked today just about the VIX, but there are other actually volatility products. How do you?
There's the VIX, there's there's VXX, which owns futures, UVXY, UVIX, which owns futures, SVIX, which is short futures. So that's generally, I believe, the big 5 that will trade. But those are all, you can trade them in an IRA. You can trade VIX contracts in IRA. I trade mine in my IRA because it makes good portfolio hedge for me. So also I don't have any tax consequences that way.
We love that.
Makes life easier.
Yeah.
So a cash account works. You don't need a margin account. We don't do any margin trading in the strategy. Mostly because I think that's a very hard retail strategy to do well. It's not easy. A lot of hand holding and stuff like that.
Sure.
And you need a margin account, which not everybody has.
Right. This is not that. You do not need a margin account
not that.
to do this. If you guys are new to Option Pit, I see some new chat names in the chat I've never seen here before. First of all, welcome. I'm so glad you're here. You came to learn about VIX zones and Ripzone at the perfect time. If you are new to Andrew, if you've never met Andrew, maybe you've just seen him this week on some of our state of the market content. Andrew is an ex-pro trader. He traded on the floor of the Chicago Board Options Exchange, the P Coast. He actually trained Mark when Mark was first learning how to trade. And there's a training program that anyone who trades on the options floor, the Chicago Board Options Exchange floor, has to go through before they can be a pro floor trader. Andrew both built that curriculum and helped teach a lot of floor traders. So Andrew is not new to teaching people how to trade.
No.
And I'm going to pop some testimonials on the screen now so that you guys can read a little bit about other traders' experiences trading with Andrew. And these come from experienced options traders and new option traders alike, are providing this feedback. So if you are concerned about your own ability, if you don't think you could learn something like this, I show you this to let you know that you are in good hands. And when you join Ripzone with Andrew, he is live with you every single day, not another trader, not a mentee of Andrew's. Andrew himself works with you for 30 minutes every day. Every day the market is open, he's there with you for 30 minutes going over the zones, the direction, the curve, how you're going to be setting up a trade. He'll answer your questions. And like he said, it's a small group setting in there. If you ask a question, Andrew's going to see it and he's going to answer it. So you will be in great hands learning from Andrew. And it's very hands-on. It's a daily strategy. Now, if you don't want to go every day, if you don't have the time to go every day, that's okay. You're still going to get the daily briefs, which will give you the gist of what you need to know. Every trade alert that goes out will have, you can get an email and it also sent to your phone. So you're not going to miss anything. And then you'll also get access to all the class notes. So can't go to class for a week, can't go to class for a couple of days. You'll still have access to all of that you can review on your own time. Andrew, you have a really special, great group inside of Ripzone. You want to talk about that a little bit? You guys are, I would say, one of our more active trading strategies here at Option Pit. And I love going into that chat room, which is 24/7. I love going into that chat room specifically on market down days, because a lot of people in other strategies, or if you look at your long-term portfolio, you might be nervous. It's red everywhere. Not usually for Ripzone. Usually those big move days are exciting profit days for you guys.
Generally closing stuff,
right?
Which is good. Because that's what we want. We want movement through a zone. Movement through a zone means we should be closing contracts. So yeah, and a lot of my students have been with me. I want to say we had some students here for 14 years since we started Option Pit. They just like the community. They like the fact that we create different trades on a daily basis. So there's always good idea flow. Everything is market oriented, as is we're of the market that we have that day. And they also have a lot of good ideas, you know. So students now, the longer they're here, the more comfortable they are bringing their own ideas or commenting when they're getting in and out of my ideas. I trade all my own ideas. And people ask questions. They ask questions during class. While we're doing the master class stuff, I answer all the questions at the end. But normally in class, people ask questions during the day. You know, a lot of, actually, it's pretty active during the day. And it works really well. So if you want to learn how these products trade, and you want to learn to get better trading them, or you want to trade with somebody that's actually doing the trades in class with you, although I do wait till the alert goes out, and getting updates on, okay, I'm closing this here, I'm closing this there, all of that kind of stuff. That's what we do every day. So sometimes I have to stop class because I got to close my own trades. But generally, or my students are telling me like, Andrew, maybe we should close those here. We're making some money. Maybe we should just take the money right now. So those are all helpful things when you're a busy option educator like myself, and trader, I guess trader and educator now both. So yeah, you'll definitely learn a lot there.
Few questions I'm seeing in the chat to address. Alana, you don't need a specific trading platform for this. You can use whatever you use. It doesn't matter. You're not going to be limited in any way.
Right.
You are able to ask questions in class, like Andrew said. We also got a question, do you need to get the trade done when the alerts come out? How much time do you have to get into the alert after it is issued? I would say that these are probably, what do you think, Andrew, within an hour or two of being received? It's not that you need to be there and enter it in 1 minute.
Right. They are time sensitive because we are trading volatility products.
Sure.
They move.
Yeah.
And, and I want to just be honest with you. If you don't think you can place the trades within a reasonable amount of time, you could come to the chat or ask later, is there a way I can, alter them if I miss the price or something like that? But the only thing I could say, it's real trading. It's real time. I'm doing the trades. And you have to be able to open them and close them. Even when we give you alerts, you still have to be able to close your trades and get into them. So that's the business and work of trading, and you have to be able to do it. So if you can't do them till the next day or something like that, I think you're going to have a hard time because things move away from you, right? And generally moving away from the entry price means we're making money.
Right.
So
movement's good. You just want to be on the train, not off it.
Correct.
Any other questions, guys? Pop them into the chat. We've been here for about an hour, so I want to wrap this up for you guys. Thank you for spending some time with us this afternoon after market close. We really appreciate it. We know your time is valuable, and hopefully we made this valuable for you by showing you a way that you can make money starting very soon in a very clear-cut way, trading the most predictable name and the most predictable movement in the market. So, Andrew, thank you for being here.
Thank you, Hannah.
Always translating. I'm always happy to translate for you. If you guys, I didn't introduce myself at the beginning, my bad, but I am the Director of Product Development here at Option Pit. What that means is I help take pro-level trading expertise and distill it down so that everyone can understand it and you can learn how to utilize pro-level trading strategies no matter your experience level. So that's what I do here. And hopefully you learned something today. If you take away one thing, the VIX is at a very exciting turning point right now at 18. And because of that pressure cooker we talked about, we could really see a pretty violent move either up to 24 or back down to 13. And I want you guys to be able to profit when that happens. So hop into Ripzone. Again, you can give us a call. We're doing payment plans today. We'll be around on the phones probably for a couple more hours. So give us a phone call and we'll get you set up. Thank you guys so much for being here. And thank
you for coming.
Yes. Thank you for coming. We will see you guys back here soon. Tomorrow morning.
All right, everybody. Have a good day. Take care.